The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 4th, fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets. Let's go figure out what the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. Together, let's go hunt and peck. Let's go figure out what it is that the markets are communicating to you and I on multiple time frames for whatever instrument it is that you are trading. So let's get this show kicked off on this fantastic and fabulous Friday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading up 72 points at 17,015. S&P's up 9.5 points, trading at 2,002. NASDAQ Composite up 23. She's trading at 4730. Russell 2000, the strong dog out here, up 10 points, trading out at 1086. The DAX closed up 72 points. The FTSE closed up 68. Gold is trading to the upside by $12, trading at $12.70. Silver up strong. That's up 56 cents. That's trading at $15.71. Light sweet crude up strong as well, up $1.09, trading at $35.66. To the downside, well, you got the U.S. dollar index. That's down about 26 pennies, 266 ticks, trading out at 97.35. So we'll take a look at the currency market. We'll go see what the euro, the yen, the pound is doing out there. To the upside, dollar-wise, leading the charge, you've got Chipotle up over 2%. It's up $11 and change. Broadcom up 7%, up about $10. Regeneron Pharmaceuticals up 2%, up $7. Cooper Companies up 4%. That's up $6. CST Brands is up 16%. That is up $5. Leading the charge to the downside. Individual stock-wise, you've got AutoZone down 750. You've got H&R Block is down about 6%. Cal-Maine Foods off $5. Wynn Resorts down 4. Intuitive Surgical down $3. So not much dollar-wise to the downside, individual stock-wise out there. So let's begin the day. Let's begin the day by understanding where the hurdles are for the market during the rest of the afternoon. The hurdles really present themselves on the 2-hour charts out here. Let's go to the 120-minute time frames. Now, I'm looking at the index futures accounts out here, contracts. And you can see you're looking at 4 different quadrants, 4 different panels. You've got the NASDAQ, the NQ, which is still a stubborn little mule out here. The NQ, that's the upper left-hand corner. That has a little key reversal session that says we're going to identify where resistance is now on a 2-hour basis. ES Mini, that also has a key reversal here. This all, by the way, these key reversal candles all took place between at 8 o'clock this morning. No, between 8 and 10. I always have to remember how the time frames work on this chart in the e-signal application versus the NinjaTrader application. So between 8 and 10 during the Jobs Friday release of information, key reversal nonetheless sets up some resistance out here. Same thing on the lower right. That is the Dow 120-minute chart. But the Russell 2000, it took out its resistance line. So the weak link out here is actually relatively strong. It has cleared resistance when we take a look at its 2-hour chart. Now, back to the ES, back to the Dow futures. Inside the ES, we also had price moving higher, doing it with less relative strength out there. we can see as it was moving up into the 10 a.m. This is a 2-hour chart, so between 8 and 10. I'm just going to go ahead and expand this out. Price was moving higher, doing a less relative strength out there. What does that set up? That really sets up resistance. It sells the potential for a sell zone out here. If we do see a close above the high of that session, 2002.25, then price is above resistance out here. Is it a real valid signal? You had one bearish candle, that bearish candle being a bear sash, being a key reversal, and then the very next candle, in essence, eliminated. So it's a real neutral type signal, but it does tell you and I where the resistance zone is. And the same type of pattern, if we take a look at the Dow out here. So the Dow futures 2-hour chart, we can see same type of setup. This says here any close inside the Dow futures about 17,009. It's not 007, it's 009 out there. I think 009 still was a secret agent. Certainly it's a secret agent. We take a look at our charts out here. You see a close above that, then you're really above any resistance for the day. That would say that the markets would close at their highs. And they could close right around here, and you'd be pretty close to the high. So the Russell, which is the lower left, has really given us a very bullish signal out here. If we do take a look at the NASDAQ, it did not have, price was not moving higher with this relative weakness because price really wasn't moving much higher. It has been basically in a sideways flow since March the 1st. We're at March the 4th out here. So you got a consolidation. You might say, what good is that? I would say, hey, that's really good. Why? Because it would help you to identify what the potential move is to the upside or to the downside. So if we go take a look at that, that's the beauty of a consolidation out here. Here's your consolidating pattern, which really runs from approximately, we'll call it 4,300 up to 4,353. So you got about a 50-ish point move. So any close above that high from between 8 and 10 this morning inside the NQ, 4352.75. It doesn't have to do it today, but maybe Sunday night when the futures open, says you're going to get another 50 points out of that. Now, if you get 50 points out of that, I'm not saying we are, but if you do get 50 points out of that, that's going to go ahead and take care of this little issue out here, this little booger. And that is in the, if we take a look at the daily equity futures contracts. Upper left this time happens to be the ES Mini. Upper right is the NQ. Lower left the Dow. Lower right is the Russell 2000. It is only the NQ that still cannot get above its weekly TAS market profile high out here. And that price point is 43.50. So you're at 43.35 right now. As we said, you break above that consolidation. You've got, in essence, a 50-point move. It would go ahead and take it out. But until it does that, it's got to make you say, it makes me say, something to think about. It's not really great that it is not able to take this out. You got to ask yourself why. You don't have to, but I'm asking you to ask yourself that. Now, with regard to the other 4 futures contracts out here, they're mean and green. They're bullish all the way. The Dow says it's moving up to 17,285. That's only another 200-300 points from where we're at right now. So it can do that in the blink of an eye. I would say that more likely than not, it can get up to 17,656 out there. It's all going to be dependent upon the NQ. Maybe. Market's been moving higher without it, but they would like it to join the party. It's a little lonely without the NASDAQ. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 71. S&P is up 9 points. Let's go to a question posed to us inside our Tigers Den out here. The question is with regard to the USO. That is United States Oil Fund. So it's the ETF for the light sweet crude contract out here. And the question is, this individual is Tigers in a nice profit position. And the question is, should I sell it or hold it over the weekend? So let's try to go answer that question. And let's think about this in a reward to a risk type scenario. We looked at a hurdle inside of the markets. We began looking at those key reversal sessions inside the 120-minute charts out there, and we looked at the daily time frame for the NQ. And if the NQ was up and over that weekly resistance level, I would be telling you that there's only one, just like Curly, there's only one thing that I can find that is potentially bearish inside of the market. Now, when I say bearish, I'm not really necessarily referring to the next market top out here. I just mean where we might start to see so I got to be careful with the words that we select, but a short-term top that would be in place. I can get it to a long-term top, but the market has to do certain things, and it's not going to do that today. But back to the ranch out here. If we take a look at Jen, Ellie Mae Clampett, and the whole bit, they're out here celebrating, and what they're celebrating is they think that the light sweet crude is going to potentially break through this consolidation level. Now, you're looking at these little yellow rectangular box on my screen out here, and it is very close to breaking through this consolidation. Now, this consolidation, by the way, is priced around $29, so say from 29 to 36. So what do you got? You got a 7-point move. And if you close above this level, you'd have 7-point move to the upside. That would be a beautiful thing. But if we take a look at what's going on, here would be kind of a somewhat iffy situation with regard to the markets. You and I know that the U.S. stock market is tracking light sweet crude like white on rice. Don't even know what that means, but it was the only thing that I could come up with quickly. What we know is that the daily, over the course of, we'll just take a look at just simply the last 5 weeks out here. Over the course of the last 5 weeks, the number of days where light sweet crude is closed up and the markets have closed up or light sweet crude is closed down and the markets have closed down is above 80%. So we cannot deny that correlation. The level that light sweet crude has to close above, and I don't know that it'll do it today. If it did, I'd stay in. But if it does not, you're looking at 36.28. That is the top of its daily market profile. This happens to be 2 30-minute charts that we're looking at on our screen out here. And so this becomes reward to risk. If 36.28 is resistance, which it may not clear, don't know if it will or won't, and we are right now trading at the price point of 35.80. You're only looking at about 48 cents, another 50 cents. Now you can easily get that move and that test on Sunday evening. Maybe it's early Monday, and you might get a test and rejection. And if you get a test and rejection, and light sweet crude starts pulling back from there. And where could it pull back to? Should it could pull all the way back to 33.46, not have anything wrong with it because it's just trading in a consolidation. It could even move lower than that, right? We looked at 29 bucks. Then because USO, you're not going to be able to trade that Sunday evening. You're going to be stuck in a position. I'd rather see you take your profits now because the reward is just so big out there. We don't have any confirmation. We don't know if it's going to be able to break above that. If we get a break above that, then you've got in light sweet crude a $7 move, a measured move of $7 out there as we go back and we take a look at the daily chart. Then I'd say, you will have paid some insurance, but the insurance was you took profits. There's never anything wrong with taking profits out there. And it costs you a little bit more just to get back into that market in order to have the market prove itself to you. So, if in fact we see light sweet crude take out that level, $7 the upside, knowing you've got an 80% correlation going on inside the S&P 500 right now, the market is going to go ahead and zoom higher. Eventually, the NQ will go ahead and get up over that hurdle out there. So that is how I would take a look at the trade inside of USO. If we take a look at USO specifically and look for any signals here, we've got some recent swing points that it's trading into. This happens to be the trading session from January 28th and January 29th. Those had respectively 66 and 47 million shares that day. You are trading into that swing point with 31 million shares. Even if we doubled it now, and we don't have that kind of time left in the day out here, you'd start to get up to those levels. But it's not likely that it's going to go ahead and get to the 66 million share. You're going to close inside the swing point, or you're likely to close inside it, which is 941. But it still doesn't guarantee you that because you've got the underlying instrument, which is the light sweet crude contract, that you're going to get up and test that 980 level. So just the way, now if I put market profiles out here, they don't mean as much, in my opinion, when you take a look at the underlying instrument of the ETF, to take a look at now this is Stevie talking, this is not John Logan, but for me they don't have as much meaning because it's really, this is being traded based upon what's going on inside of the current contract out here. But you could say on the daily basis you're also up against a resistance level out here. We take a look at its daily. So not to belabor the point, but I say take the profits and and have a nice weekend. You can always get back in the trade out there. So what is it that is the wild card out here that Stevie can't figure out what the actual meaning is? And it's this. It is this. Now, the advanced decline line in the New York Stock Exchange has been extraordinary. It has. If anybody is telling you that there's been no market breadth on this move up here, just shoot them. Now, I don't want you to really shoot them, but just ask them to prove it. How about that? Just say, well, I tell you what, why don't you go ahead and prove that to me, that there has been no market breadth? And then you can go back and you can play the archive of the show and you can prove them otherwise. And by doing that, let's go take a look at, I got to find the chart out here. Give me a moment. Where is the chart? There we go. No, I don't want to look at that one. Not that that's not that's a bad one. Where is it? Oh, it's right here. New page. No wonder I can't figure it out. Now, this is the New York Stock Exchange that you and I are taking a look at out here. And the reading for its advanced decline oscillator out here is 349.48 right now. You've got this little blue line out here. Now look, above zero, the message is the market is in the hands of the bulls out here. This got above the zero line, it looks like, on the trading session of February 16th. And what has the market done since February 16th? It has motored on higher. By the way, in the upper panel of this chart, you're going to see a descending price channel. And that's where you and I are going to really understand whether or not the market is put in a substantial and a significant bottom in the month of February out there, because that is a possibility. And where is price likely going to head to as I go through this chart with you? It's going to should head back to the top of that descending price channel. Now, does it have to? No, it doesn't, because last time, which is on the trading session of December 29th, it also looked like maybe it was going to go ahead and make a run for that. And look, you've got this gap down. You've got this window out here between December 31st and January the 4th out here that price is traveling back into. That's a natural level of resistance. I still think that price gets back up to the top of that descending price channel. Now, somebody might say, hey, you've got an advanced decline oscillator like this. This must mean all systems go. And ordinarily, I would say you're right. If you take a look at this oscillator reading back here on October the 8th, that was at a reading of 303. And where did price head to? It headed right up here to that descending price channel. I know sometimes I'm long-winded, but I got to give you the whole picture in order to try to spell it out for you. So we're going to do that when we get back from this break. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Now, our Tigress in the den, who who was the one that's in that USO trade, she's decided to take half off the table right now and the other half going into the close. And I responded back and said, hey, that's a great idea. I said, there's a really good probability that the market is going to finish at its highs today. Light sweet crude, should continue to move higher. The market should move up towards its highs. And somebody might say, well, how on heaven's earth, I don't know. But how in the heck, I like how in the heck better, can you actually reach that conclusion? And I reached that conclusion by just simply starting with a clean chart out here. Now, this happens to be the Dow. And this is no trade secret out here. Most of you already know that. But for those of you that don't, what I want you, this, by the way, it's a weekly chart again. I know I said that, but I'm going to say it again out here. And typically, charts that open at their highs and trade lower. So now you're looking at red candles out there. Just take a look at those charts. They typically, for the week, close at their session lows. Now, does it happen all the time? No, but it happens so often that when you take a look at the beginning of the week and the trading out there, it gives you a really good signal. If the lows of the week never get taken out or get taken out by just a smidgen and continue moving lower out there, look at how often the market really trades and closes very near that low. The same thing to the upside out here. Take a look now in this week here. Certainly we got below the open of the week of Monday out there, not by a ton. And it is not unthinkable. It is not unreasonable. In fact, it is very reasonable to anticipate that the market could and should close towards its session highs. Now, in this market here, where you've got people that are on both sides, really on both sides of the fence, right? Should I short now? Should I not short now out here? It's nothing like some sphincter muscles of those that are short saying, well, shoot, the jobs numbers didn't push it to the downside. The market continues to creep to the upside, seems to me. And this is also, you can do that same pattern out here on a daily time frame, a daily chart out here. So pretty good chance that the market is going to, I'd say odds favor that it's going to close up towards the session. I no guarantees, just like anything in trading. It's why we make sure we manage both sides of the trade out there. Now back to the shack out here as we take a look at the New York Stock Exchange and that advanced decline oscillator reading. 349 is the number out here. There has been, throughout the history of the New York Stock Exchange, only one other time, at least through all the data that I have, only one other time that the market has been above this reading. The highest high is 383.10. 383.10. Any idea when that took place? Not only one instance. Now, look, one instance is a really lousy sample size. I mean, it basically stinks. However, to ignore it, I would never do that. So I would never ask you to do that. Oops, I got to go find that. Where is it? I know it's real close here. Where is it? Oh, we're in 2006. No, it wasn't back that far. I passed right. There we go. Here's the reading right here. Happened to be on the trading day of January 6, 2009. Now, the reading there, 383. There's every bit of a chance that we're going to get up to that 380. Look, that's the highest reading of all. What happened once we saw a turn down, you had to see a turn down in that advanced decline oscillator. That is part of the trick out here. You had to see it turn down. Now, this was before the eventual lows that were put in here. Now, normally you get above 150, and that's a real positive indication that the markets want to move higher out here. But that last push higher before the markets moved lower into the March 6th time frame out here, was when you got the highest advanced decline oscillator reading. Kind of another way to describe a exhaustion move to the upside. And so it remains a possibility. Ideally, what we would see out here is we would actually see price get up to the top of that descending price channel, get towards that. It doesn't matter whether it's 380 or not. You're already up into the second highest level, so I'm not going to put a number on it. But we wouldn't see a turn down in that advanced decline oscillator until we saw price get up to that level. But we've got to keep an eye on it. As bullish as I believe all the signals are in the market, with the exception of the NQ on the daily chart out there, and I've got other signals, signals I shared with clients yesterday and again this morning, a separate set of signals that say these markets want to move higher, even to the extent that the New York Stock Exchange could take out this descending price channel. Even to the extent, you got to remember where we are at in our cycle. We are in the favorable seasonal cycle, and it gets really favorable really favorable at the end of January. January 20th was the bottom, was the low out here. We had a little bit of a spike lower into the time frame out here inside the New York Stock Exchange on February 11th. So close to the end of January, that you would be sniffing and you would be looking for it, that we cannot discount that as a possibility out here. A question that says, am I bearish gold? And the answer is no. We do not have a signal yet to be bearish gold. I don't believe we have that signal. However, I believe we are we're getting close. Now, we could actually get there by the end of the day. We could. And if we get that signal at the end of the day, my clients know what we're going to do. We're going to go ahead and take a trade out there. But we are not, and I can't give that number. Just can't, because it's a possibility of a trade setup that we are looking at. But I cannot be bearish gold just yet. But I could be by the end of the day, by 4 o'clock. Just no signal here as we speak. Just yet. Someone says, or David writes, double top. Yeah, double top. But I see at least 4 or 5 or 6 other, 7, 8 other double top secret trade. That's right. Other significant things that are telling me that a top is nearby out here. But it's got to prove itself to me. You don't prove yourself to me, then I say signal schmingle. That doesn't even rhyme out there. In any event, you got gold trade out at 1267. I will say, if we go take a look at some of the strong equities out here, and we can do that. If we take a look at Agnico Eagle as an example, right? Nice strong equity. Let's go ahead and get the volume turned on out here. You're going to see that they're not partying like gold is, like it's 1984. And I don't even know what that means. But if you take a look at the swing point out here from February 24th, it has 4 million shares. And today you've done 2.7. Not too bad. I don't have my spreadsheet out, but I don't think you get into the 4 million share level. And you had 6 million shares back here on February 11th. Now, if in fact we see AEM close below, we'll call it 3481, close below 3486, well, that would be it. And you do it with less than 4 million shares out there. That might be a signal out there. That almost sounded like a Jeff Foxworthy thing, didn't it? You might be that might be a signal out there. If we take a look at who else is strong? Barrick Gold. Let's go see what Barrick Gold is doing out here. Right now, you got a little shooting star formation, but I don't know. Just the mere fact that it's a bearish reversal candle doesn't mean that that's it. But if we take a look at volume, let me get rid of this retracement level. If we take a look at volume, it's testing that swing point from February 24th out here. That swing point had volume of 40 million shares. You're doing it today with light half of that. Now, of course, the real signal in this case would have to be a close below 1316. I don't see that in the cards, but you are getting a failure of a swing point on price and volume of AEM out there. But I'm not using what the miners are doing as my potential signal. Steve Rhodes with TFNN. You're right.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. I have a request here to take a look at Diebold. DBD is the ticker symbol, suggesting that this equity should have a nice move higher, as they tend to do well because they sell election e-voting machine software and machines out there. So says it works like clockwork. Now I put a little fourth quarter for every 4 years. That's what this little time cycle analysis is. So if you go back to October 1st of 1996, you can see it closed up towards its high out there. That was by December. I don't know when they report. If you look here at October of 2000, it also did the same. If you look here in October of 2004, it did the same. Hey, it had a bad problem in October of 2008. It actually did not finish higher out there, nor did it in October of 2012. So, maybe not. Let's go take a look at this instead, just based upon what it is actually doing out here. And so let's start with this. First, let's get some volume analysis out here. It's made a low recently, February 11th, 1.4 million shares out there. The price point was 22.86. That low was tested, got down to 22.84, so by 2 pennies, with 577,000 shares. There is a test of a swing point with light volume, so that is what you like to see. You're trading above that swing point right now, so that's what you like to see. And you had a little bit of a sign of strength, no wide price spread, but a little bit of a sign of strength out here on March the 2nd. So from all of those standpoints, things look okay. If we just take a look, and we'll take a look at market profiles and a few other things. If we just look at trend lines out here, this is for Warren in Denver. If we just look at a trend line, if that's what we use for a trend line, the trend's been broken, so that's pretty good. Let's get rid of that. Let's go. That was some diagonal resistance, so it is through that. Let's take a look at our daily and weekly profiles out here. You just had let's do this. You just had a brand new daily profile that formed on the screen. If we just simply turn our price off here, and I actually go turn off the weekly, we'll turn it back on here in a moment. But Warren, I would say you've got a brand new daily profile that formed out here that is above the prior profile out here. So that is bullish. It says you've got resistance at about 25.98 out here. And that's where it ran into resistance about 3 days ago. So you'd like to see that 25.98 level get taken out with more than 962,000 shares. If we look at it, it's above. So if it gets above that, then what it says to you, it says that the price ought to move up to, and you're above the weekly profile. You're above the bottom. You've got that point. So you're going to run into some significant resistance, PS theta resistance, here at about this 25.93 level. Now, what it's also doing there is this had some volume on January 25th, 1.4 million shares, and you're coming into that little swing area with light volume. So it's going to just run into some, doesn't mean that it's a bad trade or anything like that, just it's going to run into some real resistance between where you're trading right now and 27.90. If you clear 27.90 out here, you know, then that looks real good. The only thing that I could do is just take a look at retracement levels. Whoops, you got to take a look at retracements versus expansions for you to take a look at other levels where, in fact, DBD, Diebold Inc. could actually trade up to. And so that would say if you get above that 28.59 level, then look for about 32 bucks. And then you're just going to have to take this trade and analyze it as each day goes by. So, Warren, thanks for writing, and hope that assists you with your trade inside DBD out here. Got the Dow's up 108, S&P's up 14. So that's really what you and I anticipated, right? We ought to see the market close up at its highs today out here. A question inside the den. Steve, what do you see on the daily yen? No position out here. All right, so let's go take a look at the yen, Japanese yen. You got to trade out at 114.08. Is there anything that we can see out here? Let me turn off these profiles, edit, go ahead and turn those things off. And what is it that we see? I see a hammer out here, certainly from February 24th. So, and then I see, if not a hammer, I see a morning star. So you've got a nice solid bottom that was a test of a previous low. You can't call it a double bottom technically. You might want to call it a double bottom, but a double bottom doesn't happen until you actually get above the consolidation zone out here, right? And the way that you know if it's a double bottom is you take out the prior swing point. Well, that prior swing point, actually, it's not even there. The prior swing point that it really has to take out, technically speaking, and since this is a technical show, it's got to take out 114.87. If it does not take out 114.87, it sets up, you got it, it sets up a consolidation, right, between a test of a swing point on the bottom. And quite frankly, if we go back to Diebold, you could exactly have the same kind of pattern out there as well. Then that gives you your trading range. So I would say inside the yen at this stage here, until it takes out 114.87, you know, we don't know what we have. It ought to be able to get up there. I don't see any reason that it shouldn't be able to get to 114.87. If it gets above that, it'll go back to an old resistance line, which was 116.19. We will say we'll have changed its trend to the downside if, in fact, it can get above 116.19 out there, and that is the U.S. dollar, Japanese yen. Hope that helps you out, Danny, in Atlanta. So what else do we always want to keep checking in? You know, what's the NQ doing here? Is it catching on fire? Is it waking up? Is it getting above? Boy, it's going to test it. Of course, it already tested it earlier. I think it was $1 away, was it? The number that we're looking for is 43.58, basically. You're at 43.48 as we speak right now. 43.57 wouldn't be bad, but I'd like to see it close about 43.58 out there. And that says that the market continues to move higher. Again, I don't have anything. In fact, all I have is a long list of items that says the market wants to move higher. But and being long in the market out here, then that means I've always got to go look and say, what have I missed? What is it that I've missed out here? And try to find those things, and then be aware of them and watch how those things trade, how those things work. Okay, so what else do we want to take a look at? What else do we want to take a look at? When might the market form a top out there? We looked at the New York Stock Exchange, right? If we take a look at this chart here for the VIX index, and give me a moment, I'm switching over to a different chart out here. Let me put this out on my screen out here. I'd say that from this high, recent high. This is on a trading session of what? This is on January 21st out here. That from that high, if we start doing our wave counts to the downside, you know, you're in wave 6 right now. So that says that maybe it's when you get to that seventh wave move to the downside out here, which couldn't occur now until Tuesday at the earliest, that might be the place that you might start looking. What also could occur at that same time that would give us a nice signal is if you take a look back on the trading session of December 24th out here, what the VIX index did was it formed a nice little hammer candle. So you have not gotten down to that session yet. That's what you want to be watching for, 1445 to 1588 out here. You know, ideally we get a nice, now when I say, you know, and what we don't know is when the market makes a turn to the upside or downside, we don't know if it's a significant bottom, tradable bottom. It's a tradable bottom. Same thing to the upside out here. So in this show here, we cover short-term, long-term, intermediate-term out there. But that's also something I have my eyes sort of glued on. Steve Rhodes with TFNN. You've got the Dow that's trading higher. I think it's up about 104 points. So we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 112, S&P's up 15. And another question that came in says, Steve, thank you for helping me maintain reasonable thought patterns. Well, that's good. In your opinion, what would happen to gold if the Chinese devalue their yuan and the U.S. markets. Thanks. To answer that question, what I would need to do, and I apologize, I don't have the RMB or the yuan cross rate symbol out here. So I'll have to go find that and then be able to pull that up and then just simply, now it doesn't have much in the way of fluctuations, just has these spurts out here. So I don't know that it's really going to give us a whole lot of information. And so what I would do is I guess the only answer that I have, first, I'd like to put the correlation chart up there for you. I can't do that because I don't know. I'm not going to go hunting and pecking here in the next 3 minutes to be able to give you that. Instead, I would just simply trade the patterns that we have out here. Those patterns are very simple. Right now, the markets want to move higher out here. We've got really two areas of concern. I shared one of them with you. I don't have enough time to share the second one right now, but all indications are a go. Whatever the Chinese, decide to do out here. And that says New York Stock Exchange wants to hit the top of that trend line. Says that the S&P wants to shoot for 2023 to 2081. Says that the Russell 2000, this is strong like bull. It is real strong like bull out here. It's headed to 1113, 1160 out there. With regard to gold, I will tell you, we don't have that signal just yet. We're getting close. It's getting close. That regardless of what the Chinese do with the RMB out here, what gold is going to do is going to take people to the cleaners. It is going to. I think I'm the only person on this page out here. It doesn't matter. It is going to, and I'm not really referring to you, I'm referring to all of the folks that piled in on gold and have piled in on gold over the last 2 weeks out here. And they're going to get just schnookered out here. They're going to hate it. And just think of how many people have piled in. Let me just put it to you this way. Think of how many people here have piled in on gold since that exhaustion day on February 11th. If I am correct about that, look at all the people that are going to be trapped up here. Think of how quick they're going to be to sell. And then think of how quick we're going to be to buy when gold gets down to a nice pattern, to a nice buy area out here. So I believe it's already written in stone, and it's just a matter of time. Could be, maybe it began today. Another exhaustion move out here. Maybe it is going to begin Sunday or Monday, but we're getting real close out here. And I just think the way this thing is traded, it's just simply, it doesn't matter what the Chinese do with regard to their currency out here. It's already been etched in stone. And we're just waiting for the signal out here. So, and if that signal doesn't come, I would never. That's why we had a caller yesterday. I said, are you trying to get in early, or do you want to wait for a confirmation? For me, it's always better to wait for a confirmation. I mean, that's why we do this technical analysis stuff. It's not about buying the bottom tick and selling the top tick. Although every now and then you do it, you feel really good, but it doesn't make you a better trader out there. I think what makes you a better trader is safeguarding your assets out here. And that's what I do for my clients in the newsletter with Mastering Probability. Folks, if you haven't had a chance to try it, come on over to the homepage at TFNN.com, go into that newsletter tab out there, and give Mastering Probability a shot. So hope everyone had a great week. Make sure you have a great and safe weekend. Stay tuned, because it is Fabulous Friday. That means we have our fabulous polar bear. He'll be up next on the Tom O'Brien Show from 3 to 5, and just use stops out there. Thanks, folks. Have a great weekend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.